Hello there, ladies and gentlemen. Karaoke Andy here, and today we're doing a little special because I will trade live with you the CPI release, which will happen in roughly 10 minutes. So, let me just do a quick check. Am I in fact live? Looks like I'm live. Look like nobody's watching me yet. I posted that pretty much last minute. I made their little poll and realized the poll is running for a day, but the CPI release is actually already now. So here we go. Anyway, this will be recorded, so no worries about that. Anyway, this is a no financial advice, only for educational purposes. All right, so the disclaimer here. Trading involves risk, and past performance is not indicative of future results. Always conduct your own research before trading. This stream and its recording is for educational purposes only and includes an affiliate link. All right, so here's me again. So the release will be, before I talk about the presentation here, the release will be in roughly 8 minutes. I will use an entry technique from Tom Hougaard called Rule of 4. I will explain that while I'm doing it. It involves waiting a couple of minutes, so we actually have some time. So don't worry. I will definitely take trades in the release, just will not trades at the release directly in the first couple seconds, but wait until the initial momentum shows direction. So anyway, right now I'm trading 3 accounts. I have still my TD365 account, I have a Trade Nation account, and an FTMO challenge. And what can I say? My affiliate agreement with Trade Nation now, and if you still use TD365, there's nothing wrong with that. You know, I still also am with them. They belong to Trade Nation anyway, so I just went with the mothership, right, so to say. So why it's a good idea to go with Trade Nation? They offer low and fixed spreads, right? So you can save a lot of money. For example, if you trade just €5 a point, take 3 trades per day, something that is not, it's nothing spectacular. Already compared to, for example, eToro, you save €13,500 per year, right? That I rather want to have in my pocket. That's why I trade with a broker with fixed spreads. And not only are they fixed, they're low and fixed. So if you want to support my content and are looking for a broker, why don't you check out Trade Nation here? But anyway, always conduct your own research, compare for the instruments that you are trading. Cost of trading are really something that matters. Maybe you have some requirements of technical nature. But if you come to the conclusion that Trade Nation might be something you want to check out, kindly use my affiliate link at no extra cost to you. You would support my work here. And I'm basically with Trade Nation / TD365 for almost 5 years now. Can only recommend. You can scan the QR code, go to my website, wherever, or type that link here. Will all lead you where you need to go. So, if you're a complete beginner and want to learn trading, believe me, there's a lot of nonsense out there, a lot of fake gurus telling you all kinds of stuff that is just not right. So I took it upon myself and made a little video series. You can watch them for free in YouTube. By all means, learn from whoever you want. This is meant to give you a foundation, right? So that and that's how I call it, a day trading foundation. And after that, study, for example, Al Brooks, look into the works of Tom Hougaard, Larry Pesavento, and then you're set, right? So give it a shot. Yeah, as I said, I will use entry techniques from Tom Hougaard, especially the rule of 4 today. And let's see, I will explain while I'm doing it. I decided today to again use a prop account. A lot of you guys are using prop firms and do not much with mine here. Something that we looked into during my last venture. You know what I'm talking about. So I bought myself a challenge out of curiosity. Still trading it sometimes. Let's see. So CPI, what can happen? Yeah, it can happen that it goes up, down, or sideways, right? It's always important to make some scenario plannings and see where that all can go. All right, so that was a little rushed, but I will trade the CPI in the Dow Jones and in the Nasdaq. Here you see a chart of the Dow Jones, and this is the daily chart, and you see we are in all-time high territory here, clear uptrend, right? So, and today is the CPI release. Well, let's go to a 5-minute chart. I need to zoom in, obviously. And then let's watch the spectacle as it unfolds. So now it is 14:27 CET. So the release will be in 2 minutes and 10 seconds. So, and what I will do, I can maybe explain you that in the last 1.5 minutes. I will bracket the fourth 5-minute bar. I will place a long order above, a short order below. And whatever gets filled, I roll with it. I might flip the switch, change direction, re-enter. It's managed discretionary, right? So, but that's the entry technique. Bracketing the fourth 5-minute bar, going long above, short below. I will do that in the Dow Jones and in the Nasdaq. So 1 more minute to go. Fourth 5-minute bar means 20 minutes before I take a trade, right? So enough time that we can watch a little bit what happens here in the Dow Jones. Usually, if this is your first CPI release, yeah, be prepared for some crazy action. Now Dow is trading right now at 49,467. This is just a random CFD chart from capital.com. So 20 seconds to go. Here you see a little clock down here. Boom. That sometimes happens that the chart freezes, right? So you see here, it jumped up. Well, not even so crazy. Maybe the chart is still freezing. Yeah. Takes a while before the data comes through. So a couple of years ago, I tried to trade this move directly, and the way I did that was I was layering orders there. The longer I trade, the more I know that this here is in fact this is for show, right? There's almost no volume in there, so your orders will most likely not get filled. You will in there are some micro movements. You can see that on a tick chart. See my last post. I recorded that. See how that shoots up. Yeah, 200 points just straight up like a laser beam. Yeah, but don't trade that directly. As I said, your orders will most likely not get filled, and you will experience slippage. Your platform will freeze. You will not be able to take profit in time, all kinds of things. Yeah. So, and Tom Hougaard, he's an experienced guy, right? So he was looking into trading news releases, and he studied a lot of charts, and he came to the conclusion that the initial crazy price action there, the chaos, it's better to wait for it to subside and then take a trade as soon as the underlying direction or trend emerges, right? And he found out that is usually after the fourth 5-minute bar, so that's why he calls that the rule of 4. Yeah. Okay. So that means this is the first 5-minute bar, the actual release, and the second, third, and fourth. The fourth will be our signal bar. We will bracket that, right? So still hasn't calmed down yet. So let's check this out. Whoa. See that? Here right is the Dow Jones, left is the Nasdaq. Fantastic. So what you see here, those green lines, that's just a little helper for trading the espresso technique, which usually involves using an offset. I will also, when I bracket a certain bar, I want to have a little bit of offset. I use 2 points in the Nasdaq and 3 points in the Dow Jones. Yeah. You see also I have a bar number counter here. This is the first bar. Just giving it a little bit more offset here. This. Anyway, we just wait. First 5-minute bar just has concluded. Second 5-minute bar. We're here on an hourly chart. Sorry about that. We need, of course, a 5-minute chart for that. M5, M5. All right. So if you have any questions, I have the chat open. Just type it in. And I will also put that recording on YouTube. You can also rewatch it here on the X platform. Yeah. For me, I want to just show you the execution. I will also, in parallel, I have a couple more screens here. I will, in parallel, also trade that on 2 other accounts. I will do my best to juggling all the orders. Can use some size. Let's see. Doesn't hurt. Okay, I will be silent for a couple of minutes, get myself a coffee, and join you again. So alright, here we back in. Got myself a double espresso. See, there's a difference between the espresso, which is an entry technique, and an espresso, which is a coffee, right? Some guys were really, Andy, don't you know the difference? It's not espresso, it's espresso. You know, it's Italian. Yeah, like I would be a guy who wouldn't know that, right? I would be like, oh, can I have a bottle of Chianti, please, with an espresso on the side, you know, and the fungi pizza, fungi. Yeah, I want, you know, I want the Italians to say Currywurst Pommes Mayo, or Bratkartoffeln. Uh, hey, same rules for everybody, right? But the Italians, you know, they just have, their marketing is just excellent, right? You fly to Tokyo, you drink San Pellegrino, right? So, and you know what happens if you go to San Pellegrino? Which is in the province of Bergamo. There they don't drink San Pellegrino. San Pellegrino in Italy, they also they make lemonade for kids, like some sugary stuff, you know. You wouldn't believe that, like really. But who is fancy there? Who you know, fancy people, they drink San Benedetto. Yeah. Anyway, so. Third 5-minute bar is 2.5 minutes young. Yeah, again, those red and green lines, they just help me to just position orders. I can just easily then you know, just drag them down and dump them on here. Oops. Don't want to be filled now. Right. 52 views. Hey. Welcome, people. We will take trades. I will take trades for you in approximately 6 minutes. Then I will put 4 orders in, and whatever gets filled, I will trade that. So you will definitely see me taking trades. Again, for those who just tuned in, this is for educational purposes only. Yeah? No financial advice. Don't do what I do. I will use an entry technique of Tom Hougaard called the Rule of 4. I will use that in the Nasdaq here on the left side and in the Dow Jones on the right side. Interestingly, both markets have reacted in a similar fashion with a strong bull bar. A little bit of closed, not at its highest, but in the upper third easily. And then we have a bearish inside bar. Still above the release bar's midpoint, roughly by eye. And now in the Nasdaq, we printed yet another inside bar. So Al Brooks would really be happy right now, you know. It's an inside bar followed by an inside bar. But in the Dow Jones, we have we peaked a little bit out below. So, and both things are conceivable, yeah? That we see continuation up or down, yeah? Up or down. So 4 more minutes. I have the feeling that in the Dow, I can safely position a long order already. Stop loss would be the other side of the signal bar. I will adjust that. It's obviously going down still. Nasdaq, we have to be a little bit careful. That looks like could as well bounce back, just to save some time. Yeah. Okay, off screen I'm doing that as well here. Dow Jones looks like might see the lows again. In the Dow Jones, I wish I had just pressed sell 2 minutes ago, to be honest. Yo, there we go. Two more minutes. Sure, I want to use such a huge stop loss. When it's required, it's required. 1.5 more minutes. Okay. Nasdaq is struggling there a little bit. So I will put that order in first. Dow looks like it pushes down any second. So I'll wait with that. But there you see, you basically bracket the force 5-minute bar, right? With order stop loss always on the other side. That's how you do it. So 50 seconds to go. I believe if I put the order in the Dow in, we might get filled prematurely. Yeah. But at one point I have to get it in. It's now a very long signal bar in the Dow. Okay. 10 seconds to go. Now I will just put it in. Whatever happens, happens. Wow. Okay, not using such a huge stop. So that's it. And as I said, I used a little bit of offset. 3 points, just 3 points about in the Dow, 2 points in the Nasdaq. To just avoid those nasty little things where you just got ticked out, you know, your order just got barely filled and then it trades back into the range. Anyway. Dow Jones, as I said, has a huge signal bar. I'm not prepared to use more than... I don't really want to risk 80 points. Shift size down a little bit now anyway. The correct execution is you can see it here. Opposite side is the stop loss of the signal bar. Yeah. And now we just wait to get filled. Looks like we get filled in the Nasdaq. Yo, short the Nasdaq. Short the Dow Jones. Okay. Let's see. Deleting the long orders. Okay. Taking a bit of profit. Putting stop to break even. In the Dow, the move is almost exhausted. Probably bears are pushing the market all the way back down to where it came from, right? So I'm not expecting miracles here. They got stopped out in the Dow. Still short the Nasdaq. So in my preparation, I was looking at the past releases, and you have, unfortunately, a couple of times you had a situation where you just got filled on your short order, and then stopped out, and then you got filled on the long order and stopped out. So also we got stopped out in the Nasdaq. Anyway, don't know how much we made. Doesn't really matter for this. It's just about the execution, right? So you have to know what you're gaming for. I just scalped a little bit of momentum since we were clearly breaking down here, but you have to be highly aware those markets are linked somewhat, right? The move looks identical, and more often than not, when here's a little bit of profit taking, the Dow Jones seems to get attractive for buyers again, and they might step in below prior bar low. Close to the no happened a lot of the times, and you see it here. So I was just scalping a little bit of momentum. There's nothing wrong with staying short. Remember, the stop loss would be here or here respectively. And you see also we didn't manage to close below, but at the low. In the Nasdaq, staying short is more conceivable than in the Dow. Dow printed a bull bar, made a new low, closed at its high. It could be the beginning of a reversal or a sideways movement, or just a pause bar and it continues down. Anyway, I decided to take profit. Thanks for watching. Thank you very much. Have a great day. Karaoke Andy out.